It's Monday, April 13th, 2020. There is no doubt we are living in very ominous times. All you have to do is take a drive down to your local town, your local city, and look for yourself the carnage that is taking place. Look at the small business owner, look at the small restaurants, just pure economic devastation. Take a look at the homeless people that are wandering the streets now. You know, I didn't realize, I knew we had a lot of homeless out here, but I didn't realize how much homeless we had until I've taken a drive through my local cities here. And now that everybody's at home and everything's closed down, you see nothing but homeless people everywhere. And the homeless people are literally sleeping on the sidewalks. They're sleeping in front of the little restaurants, in front of the retailers. They're everywhere. And it just shows you how bad the homeless epidemic is here in America, and it's going to get much worse. And as I drive through my local areas, my local cities here, you just see the devastation that is happening financially here. And how do we recover from it? What do we recover to? Is it going to get better? Is it going to get worse? I think we're going to return to a failing economy. This economy was failing before all of this happened. It's continuing to fail, and now it's going to fail even more. I think that there's a lot of people that have a mindset that, you know, everything's going to go back to normal. I believe we haven't even seen the worst yet. Remember, the money will run out after the summer. All the stimulus, all the unemployment benefits, it's going to run out by the end of summer. This fall and this winter, we're going to see how bad things really get. Look, this economy now has been exposed for what it is. It's fake. It's been propped up. And it's taking the Fed now to inject trillions of dollars to keep this whole thing propped up. But remember, many people are not going to be returning to jobs. Many people will be returning to a job that is going to pay them less. They're going to be forced to take less if they want a job. Less people are going to have the ability to buy a car, the ability to buy a house. Their credit cards will be completely tapped out. Their credit's going to be destroyed. You know, we look at a majority of this country, 80%. Before all this happened, 80% of this country was living paycheck to paycheck. Now what happens when they don't have a paycheck? What happens when the paycheck gets cut 20%, 30%? What are we going to return to? I think we're going to return to a very, very bad economy where people are going to struggle even more than they are now. That's truly what I believe. I believe the housing bubble is going to collapse. I believe that we're going to see more volatility in the stock market. Dow Jones down 328 points today, but does it even matter? Who cares at this point what the stock market is doing? What matters is what's happening in your local towns, your local cities, your states, what's happening in the real economy, what's happening to the mom and pop businesses, what's happening to the restaurants, what's happening in the real world. It's frightening. So who cares if the Dow Jones is up or down 328 points, because people aren't getting their stimulus checks yet. The bailout money isn't here yet. Many won't even see a dime of it. So it doesn't matter what the stock market does at this point because it's so fake and manipulated. All people care about now is survival. We are going to see Americans going into survival mode. That's what we're going to return to. We're going to return to an economy where people just now try to survive. And the question is, how many will be able to survive and how many will not survive? Article today on wolfstreet.com. It's going to get tougher for a lot of people to even get a mortgage. People's credit right now, since they are not making their rent payment, their credit card payments, their student loan payments, their mortgage payments, their car payments, whatever payments, many people have already fallen behind. People were struggling before all this to even make payments. And now being out of work 1 week is bad enough. 2 weeks, 3 weeks, 4 weeks. We have nearly in the last 3 weeks, 17 million people, almost 17 million people filed for unemployment in the last 3 weeks. This Thursday, we'll get the new jobless claims. They will be in the multi-millions. So people are falling behind. So it's going to affect their credit, which is going to make it harder for them to get a mortgage. Someone in the household right now probably isn't working. Either they were laid off, they were fired, they were furloughed, or they were forced to quit because their children aren't in school. So somebody is forced to stay home and watch the kids. So whether they're working less hours or whether they're not working at all, that's going to affect their income. So it's going to be harder to get a mortgage. Wages are getting cut. People have been forced to take less money to keep a job. People returning to work are going to, in many cases, take less money to return to a job, or they won't have a job. Going to be harder to apply for a mortgage and buy a house when you make less money. Now, requirements are going to be 20% down on the value of that home. Half this country know right now, before we went into this collapse, we knew that half this country did not even have $400 in savings. So how in the world are people going to save up 20% to put down on a house? It's going to get more difficult to get a jumbo loan. Now that may not affect a lot of areas of this country, but it's going to affect a few areas like mine right here in Southern California. You look at San Diego County, Orange County, LA County, many of the people that buy homes in those areas get jumbo loans because the price of those homes on average is about $650,000, $700,000 for an average home in those counties. So many people rely on jumbo loans in order to purchase a property. But we're going to see continued problems in real estate, not just people applying for mortgages and not getting them, but there's going to be big problems coming here. Prices are going to fall. And as I've said, I see a massive real estate bubble bursting here very soon in the United States. They're going to fall as people lose their jobs. This is a recipe for disaster here. Falling home prices while millions of people lose jobs. The lenders and investors are going to feel massive pain, and the government entities that back these institutions are going to feel a lot of pain also. There is a major reckoning that is coming to the housing market here in America. And it's really going to be caused by these massive inflated prices. So a lot of people are going to lose homes. A lot of people are not going to be able to apply for a loan because they're broke, their credit's been destroyed, they don't have a job. But if you have cash, if you have solid credit and you have 20% down, boy, there's going to be some incredible sales. So the good news is, if you've been frugal, if you've been patient, if you've been saving, if you haven't been acquiring a lot of debt, there's going to be incredible sales in real estate coming soon here to America. Very interesting article on Zero Hedge today. It's titled, JP Morgan Scrambles to Raise Mortgage Borrowing Standards Ahead of Biggest Wave of Defaults in History. Also, in this article, it talks about JP Morgan has quietly halted PPP loan insurance. Why, you ask? Because the bank expects a default tsunami to hit, coupled with a full-blown depression that wipes out the value of assets pledged to collateralize the loans. So JP Morgan knows what's coming, and I know that most of you do too. They're now raising borrowing standards to mitigate risk. And it's not just JP Morgan. Many other banks are doing the same. Starting Tuesday, customers applying for a new mortgage will need a credit score of at least 700 and will be required to make a down payment equal to 20% of the home value. Now, forgive me, but I thought that was normal, that you had to have around a 700 and that you had to put 20% down. But again, look at how things have changed since the crisis, how things got creative again in the mortgage industry. No, you don't need 20% down. Things got creative. The exotic loans come back. And so people were buying houses without having to put 20% down, without having a 700 FICO. Things that we thought were normal weren't being done over the last few years. And now it's coming back, and things are going to get more normalized, which is going to hurt the housing market, because you're going to need to put 20% down. You're going to need a 700 plus FICO. You're going to need to have a job. You're going to have a real income. You're going to have less debt. And this is going to make it much harder for people to purchase a home. Also on Zero Hedge, regarding the housing industry, this is really frightening here. Retirement math, it's titled. Median mortgage debt for those over 65 has quadrupled. We now have people over the age of 60 with decades left on their mortgage. Just think about the risk that can take place there, being 60, 65 years old and having 15 years left on a mortgage. In the US, 9.18 million homeowners age 65 and over have mortgage debt. I thought that by the time you're 65 years old, your house was paid for, you're living the good life, yada, yada, yada. But no, you're 65 years old and you have 10 or 15 years left on your mortgage. This number is up 60% from 5.82 million a decade ago. I mean, are we heading in the right direction or wrong direction here in America? It's nothing but debt. Everybody has debt. From the minute you're born, you have debt, to 65, 75 years old, you have massive mortgage debt. It's incredible. So many people have taken big hits in the stock market. The massive millions who are unemployed now. And unemployment continues to skyrocket. Inflation continues to creep up. People's 401ks have been wiped out. Their retirement's wiped out. And these people are 65 years old with a mortgage. I mean, they are one bad day from a nightmare. And it's coming. The nightmare is here. And we're going to see a lot of people lose their homes. And unfortunately, a lot of these people are going to be 65 years old or older that are going to lose their homes because they were heavily invested in the stock market. They had 401ks, and these people are going to get wiped out, lose everything they had. CNBC today, Ford shares fall after automaker warns first quarter losses, and a nearly 16% dive in revenue. Bloomberg today, fear of impending car price collapse grips auto industry. You know, when we go back into this economy, when people leave their homes, when the stores reopen, what's left of them, how many people are going to rush down to the car lot, go buy a car, new or used? How many people are going to do that? I don't think very many, especially when we've lost nearly 17 million jobs in the last 3 weeks. And I'm very curious to see what the jobless claims will be this coming Thursday. I believe we're going to probably see around 4.25 million jobless claims this Thursday. 4 million to 4.25 million. That's my number. Please comment down below. I want to know, what do you think the jobless claims numbers will look like this Thursday? Give me a number. Love to know your opinion. Comment down below. Fear of impending car price collapse grips auto industry. New vehicle demand is depressed. Now used vehicle demand is depressed. Used vehicle auctions are paralyzed. Vehicles are piling up. They don't even know where to put these things. As prices plummet, this is putting a lot of pressure on automakers and the in-house lending units, which likely will have to write down the value of lease contracts that had assumed vehicles would retain greater value. Think about the rental car companies. What do? When these vehicles reach a certain amount of miles, they auction them off, they sell them. They're going to take huge losses here now because prices are down. So they do these fleet sales. They're going to get less money from selling down their fleet of vehicles, which are sitting idle right now. Used car sales fell 64% in the last week of March. General Motors financial unit had $30.4 billion worth of vehicles leased to customers at the end of last year. And the price of these vehicles is plummeting. I think if there's one thing we can all agree on, it's that we're living in very uncertain times. There's social uncertainty, political uncertainty, and financial uncertainty. And when you have this much uncertainty, this is the time to own gold, to own silver, and to have cash put away. We have no idea how long this is going to last or how bad it's going to get. Remember, the unemployment checks will run out by the end of summer. Then what? The stimulus will run out. Many small businesses will not be able to pay these loans back. Many small businesses will be filing bankruptcies. Many small businesses are going to go out of business. They will be gone. Many people will not be returning to jobs. Many people are going to lose their jobs, lose their houses. We're going to see one of the biggest housing bubbles in U.S. history coming. The people who hold the assets, who have the cash put away, these are the people who are going to win. The sales are coming to America. If you've been patient, if you've been frugal, if you've been saving, you're going to have a lot of opportunity. You're going to have a lot of opportunity because we're going to see a blue light sale, the blue light special here in America on RVs, on cars, on houses, on land, commercial buildings, housing. Everything's going to be for sale. And unfortunately, many people, somebody pays the price, right? Somebody's going to lose the house. Somebody's going to lose the boat, the cars, the RVs. Just think about, we've been in this for what, about 4 weeks now, 4 bad weeks. And people are already behind on mortgages, rent, the payment on the RV, the car payments, the boat payments. 4 bad weeks. And people are already drowning in debt, underwater, not going to be able to come back after 4 bad weeks. This is how fragile this economy really was. This is how the average American was living. Too many people living like big shots on credit cards, big loans. They didn't worry about how much money something cost or how much money they made. They just worried, can I make the payment? Doesn't matter how much you make, doesn't matter how much something costs. Can you make the payment? And that suckered millions of Americans into housing, into cars, into boats, into the big RVs. People living way beyond their means because they figured I could make the payment. They're going to give me the loan and I can make the payment. You can make the payment until you can't, until 1 bad week, 2 bad weeks, 4 bad weeks. What's going to happen now when it's 3 bad months, 6 bad months, a bad year? Think about the devastation you're going to see in this economy, the devastation with the average Joe and what he's going to lose because his whole life was bought and paid for with a credit card, with a loan, nothing but debt. It's interesting because you see people driving the nice cars, they've got the boat, the RV, none of it's paid for. And all they had to do is miss 1 check, 2 checks, and they're in trouble. Well, now it's been 4 bad weeks, and it's going to get a lot more brutal, and people are going to lose a lot. So not only is the economy being exposed as a fake, many Americans are going to be exposed as fakes too. The same people that go on social media, act like big shots, show us the steak dinner, show us the champagne, show us the brunches, show us the new shoes, show us the new BMW lease. These people are all going to be exposed as fakes because they've been living a life of lies on a credit card. I don't think anybody's rich because they can make a car payment. I think people who don't have payments are rich. Those are the people who can sleep at night. Those are the people who can actually pay cash for something. But everybody just leasing and renting clothes, renting houses, renting cars. I mean, Everything is about rent. Nobody has any real assets. Nobody has a net value or a net worth. And now this is all going to be exposed. Here's another article today titled, "We're heading into the worst job market for new college grads since the global financial crisis." If you thought student loan debt was high now, wait till you see it next year. Amazing. We've been talking about this for a couple years now. These kids coming out of school after dropping $40,000, $50,000 to get a degree. $40,000, $50,000 of debt to get a piece of paper, a degree that's literally worthless, that basically is sitting on the bottom of a bird cage now, while these people work at Starbucks, while they're Lyft and Uber drivers, while they're bartenders or hostesses at a restaurant. This is what $40,000 or $50,000 in debt gets you today. It gets you a minimum wage job. You know, as Rob Kiyosaki always says, PhD stands for poor, helpless, and desperate. And that's really what a lot of these people are today. Many of these people can't even put their phones down for a minute, can't change a tire, don't even know how to cook a meal. So dependent on the system, but they have a degree. And $40,000, $50,000, $60,000, $80,000 of debt to go with it. How's this ever going to be paid back? And now the job market is going to be brutalized. The curve will never flatten again. Fed balance sheet hits $6.1 trillion, is on zero hedge. This is going to explode with the amount of money that the Fed is going to have to spend to keep this whole thing propped up, to keep the stock market propped up, to pay for all this stimulus. It's just a mess, and it's not going to be enough. Look, they can prop up the stock market. They can continue to inject trillions in stimulus, billions and billions of repo injections, mortgage-backed security purchases, now buying ETFs, buying bonds, buying corporate debt. I mean, this whole thing is a mess. And they can continue to print trillions of dollars to do this, but remember, there's a huge price to pay, and it's called hyperinflation. This is another incredible reason why you better, not that you should, when you see this kind of criminality taking place, this is why you better have gold, you better have silver. And I always say, in my opinion, I don't give financial advice. I'm just sharing with you what I'm doing, my thoughts. But I do believe you need to have some cash put away. But cash is going to get annihilated at some point because of all this money printing. This is not going to last forever without huge ramifications. There's a huge price to pay. There are no free lunches. The price to pay is going to be hyperinflation. And sooner or later, that dollar is going to buy nothing. And you already know, most of you watching this already knows that a dollar barely buys you anything today. It's going to take a lot more dollars to buy a candy bar. And sooner or later, you're going to need gold or silver to buy something because the dollar is going to be obliterated. We're at 0% interest rates. Fed balance sheet now exceeding $6.1 trillion. This thing is going to $10 trillion easily, and it's not going to stop. You can kiss the dollar goodbye. This is all good for gold. It's good for silver. And it's not even a matter now of should you. It's a matter now of survival. We all need to be in survival mode. And if you plan on surviving this, look, Venezuela, Zimbabwe is coming to America. Hyperinflation is coming. Connect the dots. 2 + 2 = 4. Hyperinflation is coming to America. There's no way we're going to avoid damage from all the money printing, from all the stimulus, from all the free lunches. You need to be holding gold. You need to be holding silver. Hold some cash for a while, but at some point, that cash is going to buy less and less and less. And the people holding the gold and the silver are going to win. I'm going to leave it there today. It does not look good out there. Another article, I'm holding my hands right here, from the New York Times. It's people, people, people as lines stretch across America. You know, I'm sure most of you probably saw over the weekend the lines of cars, the lines of people. It looked like we were going back to the Great Depression. People waiting in line for food. I mean, this looked like the bread lines, the soup kitchens. Thousands of people lining up for food all across America, literally in every state. And it just reinforces everything you've been saying, everything you knew was the truth. It's reinforcing what I'm saying. I certainly don't claim to have all the answers here, but I do read the comments. I do listen to all of you guys. And you've been saying for a very long time what was happening in your cities, in your towns, in your states, what was happening with your jobs, what was happening in real estate. And so all we have to do is connect the dots. And I want to remind everybody, read the comments down below. The people writing these comments are telling you the truth. They're telling you what's happening, really happening here in America. They're telling you what's happening in the business world, what's happening with their jobs, what's happening in their cities. Read the comments. If you want real knowledge, if you want to see the trends that are coming, read the comments down below, because the great people that write those comments, the great Americans, are telling you the truth that you're not going to get on television. So read those comments and you're going to know what's coming. So we know more food lines are coming. We know the housing market is going to blow up. We know the stock market is fake. We know we've been in a retail apocalypse. We know that the auto market is going to blow up. We know that the dollar is going to collapse at some point. We know all this. So we need to continue to prepare. Top off all preparations. Get yourself some gold, some silver. Make sure you have security. Make sure you're walking very close to God. Thank God for every day of life you have. Thank Him for everything He's blessed you with, your friends, your family, your health, everything. Look, things are going to get much worse before they get better. I'm connecting the dots. You're connecting the dots. We must continue to prepare. We will survive this. Many of us will prosper during these bad times. You can choose to be a victim. You can choose to be squashed like a worm, or you can choose to be victorious, prosperous, and win. God bless every one of you. Talk very soon.